Hey guys, Justin here. So today we will be talking about a new stock that just popped up on my radar that I actually like a lot. And if you read the title of this video, you can see that I like this stock enough to joke about selling my Shopify stock in order to buy it. And while I won't be selling my Shopify stock anytime soon, since it is my number one stock, the fact that I would put Shopify and this stock in the same category shows you what I think about this company. The stock I am talking about is C stock, ticker symbol SE. C stock is up 28% over the past month, 370% over the past year, and is up a whopping 838% over the past 3 years. So this is definitely a high growth stock that has vastly outperformed the market over the past 3 years. Now, C, which is spelled S-E-A, operates 3 different businesses, but the biggest and most compelling, in my opinion, is their e-commerce platform called Shopee. Now, I will discuss Shopee in more detail in a second, so don't go anywhere. But first, if you are not already subscribed, make sure to do that. It's really easy, and it helps my channel out a lot. So make my day and click that sub button. Now, before I get into C stock, I want to talk about how big of an opportunity e-commerce is right now for investors. Amazon is continuing to grow tremendously, but other companies like Shopify are starting to catch up. And newcomers to this space are also starting to see tremendous growth. BigCommerce, a stock I just made a video about, recently IPO'd earlier this month and has already increased its share price substantially. In fact, in the past 4 days alone, BigCommerce has run up 115%. And that is because they just recently announced a partnership with Instagram. This partnership allows merchants with BigCommerce accounts to sell products directly on Instagram using the Checkout on Instagram feature. So if you don't know about BigCommerce stock, now might be a good time to jump in because I do think the price momentum will continue over the short term. Also, I think BigCommerce stock has plenty of long-term upside since its market cap is only $8 billion right now. Now, when it comes to e-commerce, there are many different strategies that investors can use. If you watched my last video comparing BigCommerce to Shopify, you would know that social media is going to be a huge growth driver for individual brands selling products online. So if you haven't watched that video and you would like to, I will put a card up in the corner for you. But Shopee is different from e-commerce stocks like Shopify and BigCommerce in 2 big ways. One, they are targeting the Southeast Asian markets instead of the US markets. And 2, their business model is more similar to that of Alibaba and Amazon instead of Shopify and BigCommerce. I like Shopee also because they are expanding into geographical areas that have lower levels of e-commerce usage and therefore higher potential growth rates. And their market cap is only $75 billion right now compared to Alibaba and Amazon, which are both multi-trillion-dollar stocks. So this is a company that has shown the ability to execute, and I believe that they will continue to grow for the foreseeable future. Also, I personally don't have much international exposure in my portfolio, so I think this is a good stock for me to add some geographical diversity to my portfolio. One of the reasons that I don't have much international exposure is because I don't really trust Chinese stocks, since the government over there can come up with their own rules and potentially mislead investors. And this is actually what happened recently with Luckin Coffee. So I like that Shopee is targeting a different market other than the US and that it is not a Chinese-owned company. Let's move on to some basic background knowledge on C stock for those of you who are unfamiliar with the company. Like I said earlier, Shopee has 3 different segments to its business. It has its e-commerce platform, Shopee, then it also has its e-gaming platform, Grania, and its financial services or fintech platform, C Money. Now, what I like about C's business model is that it encompasses 3 areas of high growth. Not only does it have the e-commerce aspect, but it also is expanding into fintech and mobile game development. Square and PayPal, which are 2 US fintech companies, are seeing huge growth right now due to the worldwide sickness that is going on right now, which is leading more people to use contactless payment platforms over brick and mortar banks. Also, mobile gaming is experiencing huge growth right now. Fortnite, one of the most popular mobile games in history, has 350 million players and made $1.8 billion in revenue in 2019. So I really like the trifecta of business segments that Sea has, as they are businesses that I already invest heavily into at the moment. So now that you understand what Sea does, let's talk about two very important things: the current size of Sea and the total addressable market for its services. This is important because the bigger the difference between these two, the bigger the potential growth over the next 5 to 10 years. A company like Amazon, for example, is already a $1.7 trillion company. So while there is still room for Amazon to grow, we would expect smaller companies to be able to grow faster, since there is the opportunity for them to capture a higher percentage share of the market. Now, the reason I like that Sea is not a one-trick pony is because it gives them many more opportunities for growth. If we look at Amazon, we can see that they are well diversified out of e-commerce, despite starting out as an e-commerce only company. Amazon did this in order to keep growing. In fact, e-commerce spending in the US is expected to top out at around $700 billion in 2020, which is less than half of Amazon's current market cap. So even if Amazon was able to capture 100% of US e-commerce sales, it would still not have been able to grow to its current size. Also, if Amazon relied solely on e-commerce sales to generate revenue, it would be limited by the rate of e-commerce growth in the broader US economy. So I think you get the point here that diversification is very important if you are trying to become a trillion-dollar company one day. For Sea stock, they currently have a market cap of around $75 billion, which is not much for a company that is similar to Amazon and Alibaba. But to make sense of Sea's current market cap, we also need to know the total addressable market. When it comes to e-commerce sales in the Southeast Asian markets, which by the way includes Indonesia, Philippines, Malaysia, Thailand, Vietnam, and Singapore, sales were only $50 billion in 2019. This is considerably lower than e-commerce sales in the US and China, but there is some good news. First off, the percentage of e-commerce retail sales compared to total retail sales for Southeast Asia is much lower than for the US and China. E-commerce sales in the US are currently 10% of total retail sales, and China's e-commerce sales make up 20% of total retail sales. Compare these numbers to Southeast Asia, and we see a much lower percentage for e-commerce sales. For Southeast Asia, the number is only 2.5%. But this is not a bad thing in my opinion, because to me it signals the opportunity for e-commerce to grow more rapidly in Southeast Asian countries. And when I looked at the data from many different sources, I noticed that Southeast Asia had the highest rates of e-commerce growth based on total sales numbers over the last couple of years. While e-commerce sales fluctuate, the US is growing its e-commerce sales by roughly 10 to 15% a year. And China is growing theirs by roughly 15 to 20% a year. But Southeast Asia as a whole has been able to grow by well over 20% a year and has a long-term projected growth rate of 27% over the next 5 years, which compared to the US is double the growth rate. So this is a big reason for why investors love Sea stock so much. Now that we understand the opportunity for Sea's e-commerce platform Shopee, we have to next look at how the company is currently executing and gaining market share. Because it doesn't matter how big of an opportunity there is if Sea cannot create a service that performs well in the marketplace. Now, luckily for Sea, its Shopee platform is doing really well. The key regional competition to Shopee comes from many different small e-commerce companies, but the biggest competition comes from Alibaba-backed e-commerce company Lazada. And if we look at this chart, we can see that Shopee is positioned in the top spot in many Southeast Asian countries. The largest opportunity in e-commerce in Southeast Asia is in Indonesia, where Shopee was able to jump from the number 3 spot in Q1 of 2019 all the way up to the top spot by the end of the year. So the fact that Shopee is positioned near the top in all 6 Southeast Asian countries means that they do have a top-notch service and that customers are starting to use Shopee more and more. This high level of execution by Sea has led to a year-over-year growth of 113% for gross orders on the Shopee platform and 65% growth for gross merchandise volume, or GMV, over the same time period. And this is significant because if we compare the GMV growth for Shopify over the same time period, we can see that Shopify only grew GMV by 47% compared to Shopee's 65% year-over-year growth. So this, in my opinion, is very impressive and makes Shopee a top-tier e-commerce platform, which should continue to drive growth for C for many years to come. But Shopee is not the only business segment that is generating huge revenue growth for C. In fact, in 2019, Garania, which is the digital entertainment segment of C's business, brought in more money than Shopee did. Garania generated $1.13 billion in revenue compared to $834 million in revenue for Shopee. Now, the reason that we don't see revenue from C's fintech business, C Money, is because C Money was introduced in late 2019. So that segment of their business is still in very early stages, but it too is expected to grow quickly as C already had digital wallet services embedded into its other platforms. So separating out those financial services into a different app will help C be able to grow C Money even faster. Going back to Garania, a big part of its success in 2019 was driven by their game Free Fire. Free Fire was the most downloaded game in 2019 based on the combined number of downloads from Apple and Google's app stores. Free Fire is very similar to Fortnite in that it is a free game but takes advantage of in-game purchases and monthly subscriptions for additional in-game perks. Using this freemium model has proven quite lucrative for C and has allowed them to grow the number of paying users by 180% year over year. Now, obviously, over time, the popularity of Free Fire will fade, and Garania will need to come out with new games. But it shows how lucrative this segment of the market can be. In fact, recently Fortnite sued Apple for charging a 30% fee on its in-game purchases, which Fortnite argued was illegal. So there is a lot of money to be made in the mobile gaming space, and if companies can change the policies for how Apple and Google handle in-game purchases, then we could see the revenue going to the mobile game developers, such as C, jump considerably. So of the three business segments C operates, I like Shopee the most, followed by C Money, and then Garania. The reason I like Shopee the most is because of the opportunity for growth. And we already talked about the growth potential for Shopee earlier in the video, but the worldwide sickness right now will also help to accelerate Shopee's growth. Now, when it comes to C Money, the reason I like it more than Garania is because of its growth potential as well. We are seeing a huge shift from brick and mortar banks to digital in the financial services space. So it is possible that one day C Money could grow to become bigger than Shopee. But C Money is still very early in its development, so only time will tell how successful it will ultimately be. But it does have a lot of potential. And then I ranked Garania third because even though it has the highest revenue of all three segments right now, its revenue is tied to its ability to release hit games, which can be hard to predict. But that being said, there are plenty of gaming companies that ride the successes of hit games for many years. Take-Two, for example, is still benefiting from the huge success of their Grand Theft Auto game, despite the original GTA game being released in 1997. So it's entirely possible that Free Fire will continue to be a cash cow for Garania for many years to come. It's just, in my opinion, a lot harder to predict a growth rate for the future for Garania, since like I said, it is based on the company's ability to keep releasing popular games year after year. Overall, I do like C stock a lot. C has been able to grow revenue by 163% year over year and has improved their gross profit margins from 1.8% in Q4 of 2018 all the way up to 27.8% in Q4 of 2019. Also, C has over $3 billion in cash, and their losses each year are beginning to narrow. So the risk of investing in C stock is starting to come down. But overall, this is a promising e-commerce player in the Southeast Asian market that could give your portfolio a big boost. So for me, I will be adding C stock to my portfolio at around a 2.5% allocation, which for my portfolio comes out to be right around $2,500. So I encourage you to do more research on your own into this stock before you buy it, but it is a stock that I am adding to my own portfolio right now. I have linked their 2019 investor presentation in the description section below, so feel free to look through that if you would like to. And with that, thank you so much for watching, and I'll see you guys in the next one.